Welcome to the premiere episode of the 401k Fix. My name is James Holland. I'm with Millennium Investment and Retirement Advisors. This morning I have with me Chad Azera, who's the National Sales Director for Professional Capital Services Retirement. And I don't know Pete's actual title, so how should I address you?
Investment consultant.
Here we go.
Russell Investments.
And Peter Maroney, who's the investment consultant from Russell Investments. We constantly get approached by advisors to try to find ways to help them differentiate themselves from other advisors in the retirement plan space, looking for new, innovative ways to grow their practice for their participants, but also in a cost-effective manner. So we got together about 9 months ago with both of these companies to produce and put together the next generation retirement program. So Chad is going to address the areas from an administrative standpoint in terms of how it benefits both the participant but also the advisor.
So again, thanks for having me. Chad Azera, National Sales Director at PCS Retirement. We are an independent 401k platform, record keeper and TPA. So record keeping means that we are the website that everybody logs into, the participants log into, the plan sponsor logs into, and also the advisor. We were founded in 2001 of a risk and tax law firm. We have a robust team of administrators, risk attorneys, paralegals that provide all the administration on the plan. And we also have dedicated client relationship managers that handle the day-to-day operations of the plan. We are a flat fee from a TPA standpoint, where we charge a flat either $1,500 or $2,000 fee for the administration, and then we're a per capita price for rec keeping. So it provides, when plans grow, our fees don't grow with them. It provides a very nice product for larger, as plans grow larger.
Also, Chad, if you could just take a moment, they have an excellent resource for the advisor when it comes to prospecting new plans. So if you could just take a minute and share that as well.
Yeah, so we have a proprietary tool suite called the Advisor Lab. It's a prospecting, benchmarking, comparison, and proposal tool. We have a direct feed into the DOL database. So what that really means is every single 401k plan files a tax return called the 5500. It's all public information. Now you can go out to freearista.com and search for a plan on a one-by-one basis, which can be cumbersome, or you can come and work with us, and then you can search for criteria plans in your zip code, by asset size, if the returns, or if you want to potentially go after a certain provider, you can dive in and create a list in your area, and then download that list into an Excel file, and then try to reach out to certain companies. And maybe you know somebody at one of those companies, and you can get in there, and then you can create a benchmark on that plan with the person that you know of the company, whether it be CFO or if it just if you know somebody, just a normal employee at the company. We can create a benchmark, so you can bring that in, get in front of the HR people, get in front of the CFO. Then the next step would be to get a 4AB2, create a comparison, and really dive into the plan and provide a wholesale overview of the plan to them.
And as you know, for the advisors who are in the space, this is a multi-touch business, so being able to have access to those different items, it makes it very easy from a drip campaign perspective. So again, encourage folks to reach out to Chad to discuss the Advisor Lab. The other piece, and the most important, I would argue, for the next generation program is fiduciary responsibility. How to alleviate that, not just from the plan sponsor, but from the advisor as well. So with the next gen program, there's two different levels of fiduciary responsibility. Millennium acts as the 338 from a plan sponsor level, but Russell will act as the 338 from a participant level, which is very important, and I'm going to let Peter speak a little bit about that.
Sure, and thanks for having me, James and Chad. I really appreciate joining you guys here today. Many of you might know Russell Investments already, but we're one of the largest defined benefit managers in the world. In fact, we were actually the founder of traditional consulting for the defined benefit space back in 1969. We still advise to around $2.5 trillion worth of assets in the DB space. From a qualified plan perspective on the DC side of the house, we also manage many billions of dollars worth of account balances. But we've noticed a problem in the DC space, and similar to defined benefit plans, which are going out of favor basically because of cost, Participants don't know right now in a DC plan whether or not they're winning or losing for retirement. Participants see an account balance, but they don't know what that balance translates into. So what we've tried to do at Russell is tell a participant whether or not they're on track for retirement. Specifically applying all of our methodology from running these multi-billion-dollar pension plans into a DC plan. Basically emulating all of our asset allocation expertise that we have in creating funded ratios for each participant, with the key word being automatically, without any integration whatsoever. At Russell, as James already alluded to, we always strive to contract at the highest fiduciary standard level possible regarding any of our products. So with what we call personalized retirement accounts that is on the PCS platform, here we take on fiduciary obligations on the asset allocation for each participant in a defined contribution plan. James, I don't know if you want me to go deeper into that or if that's enough, but certainly.
Yeah, again, one of the key components here is the differentiation from a target date fund, because again, there you're getting more of a canned approach. Here you're going to get something designed for each individual participant. So speak a little bit to that, if you would.
That's a great segue. And for those advisors that don't know and those that do, in a defined contribution plan, you have the QDIA, the Qualified Default Investment Alternative. That QDIA is typically a target date fund, which might be another fund family out in the marketplace. PRA, Personalized Retirement Accounts, replaces that in a plan. PRA then pulls data automatically for each participant on the PCS system and creates this customized asset allocation, allocating to funds that Millennium has selected for the actual plan lineup. With the overall PRA approach, participants receive then a customized asset allocation each quarter from Russell Investments looking at their targeted retirement income goal. One of the great things about this product and maybe managed products, James, overall, is that they've been around for around 15 to 20 years, but they've been pretty expensive overall. Russell's product is very inexpensive compared to the market. Not going to get into the details of cost here on this webcast, but at the same time, we built this program to be very cost effective for you as an advisor to go and prospect with. In addition, one of the great things of having a custom asset allocation as the QDIA in a DC plan is that you effectively as an advisor are able to lock in this plan and retain that plan from another advisor coming to take it over. Meaning if another advisor is trying to take over a plan you oversee and it's being managed in a customized solution, it's going to be very difficult for that advisor to pull that away from you, especially if it's very cost affordable and has this customized asset allocation built into it.
And if you could, Peter, just quickly speak to the ability for the advisor when it comes to gathering information with regards to accounts held outside of the 401k plan.
Yeah, great question. So as I mentioned before, we pull data that's automatically on the PCS record keeper system. We obtain that data through your platform, Chad, and we create this funded ratio and create this retirement income goal. But we understand that there are participants out there that have other outside accounts. We actually built a widget that sits on their platform at PCS Retirement that allows any participant to put in any outside account, whether it's a brokerage account at Wells Fargo, whether it's a pension plan at the state of South Carolina, whether it's rental income, any piece of data that you have, that your participants have, that you want included in this customized asset allocation, we can model that within the PCS system. Now, one thing I want to be clear about here, though, one of the benefits of working with Russell and why I think we're a good fit is at Russell Investments, we don't take on individual accounts directly. Some of the other providers of managed solutions do. That is never a fear for you as an advisor to think that Russell would be out there trying to take your clients or that we're a robo-advisor. Not the case at all. Here, we're just trying to get better data to provide better solutions for you as an advisor to keep that plan business on your books.
Great, appreciate it. Again, the key components here are cost control, having the ability to have access to professionals, as Chad mentioned, actuaries, ERISA attorneys, things to help protect the plan sponsor. So I always hear advisors, how do I bring value if I'm outsourcing this? You bring value by having that controlled from a cost perspective, also from a legal perspective, and then having someone you'll be able to sit down with the advisor and talk the participant in detail about not just their 401k account, but all the other accounts that impact their savings as well. So if you can control the costs, reduce the liability, also reduce some labor on your part, therefore being able to make it more profitable for yourself and open up avenues for different discussions. So thank you both for joining us this morning, and we look forward to speaking to the advisor soon. Thank you.